New York City Controller's Office, 1 Center Street, room 530, New York, New York. Moving the roll call, trustees.
Roll call of trustees, Ms. Rongina Goswami.
Present.
Mr. Larry Schloss.
Present.
Ms. Caroline Walker.
Present.
Mr. Steve Cassidy.
Mr. Schwab has Mr. Cassidy's proxy.
Mr. James Levin.
Mr. Rule is sitting for James Lynn.
Mr. Robert Schwab.
Here.
Mr. John Cowie.
Mr. Rule will be proxy voting.
Mr. James McGowan.
Mr. Dunn has Mr. McGowan's proxy.
Mr. John Dunn.
Present.
Mr. James Lamonda.
Present.
Mr. Sean O'Connor.
The UFA has Mr. O'Connor's proxy. Mr. Schwab, yes.
Commissioner Douglas White.
Present.
We have 24 votes in the quorum. We can start the meeting.
Public agenda.
Thank you. Does everyone have one of these monthly packages? Martin has it in living color. Do you have the color? Okay. We'll go through this pretty quickly. It's the 11-month numbers through May, so the real good numbers next time we get together with the fiscal year. Quickly go through the economy, which is basically stalled out. Kind of did the basic measure of the line going down. So you see on page 2, the economy is now growing at about 2.5%. On page 3, capacity utilization is stopped. If you go to page 5, you can see weekly unemployment claims are kind of at an elevated level. Most importantly, page 6, the unemployment rates start to go back up. It's now at 9.2%, not good. That weighs in the consumer on page 7, so consumer sentiment is down badly, and there's going to be an announcement today on the latest is the Architectural Billings Index, page 8. Below 50 means it's contracting. It's gone down for the last 3 months. That's a bad leading indicator. Existing home sales on 9 are going down. New home sales are stuck at nowhere. Auto sales are down on 12. Seems appropriate to have a fire drill.
We don't have to go anywhere.
I feel safe here. If you jump to page 14, there's a problem with inflation. The Fed's watching it. It's hard to have real inflation when you have so much slack in the system, but there's natural resource inflation going on, food inflation going on, so we'll have to pay attention to that going forward. It's about 3.5% now. If you look on 16, the dollar is weak. Weak. Getting not quite bleak, but weak. And on 17, you can see the volatility between the U.S. dollar and the euro. No idea, to be truthful, what's going to happen with the euro. It's a mess. It creates opportunity for opportunistic debt, which we talked about last month. But lots going on in the euro. Makes the stock markets all bounce around. At some point, someone's going to figure it out. But it does lead on page 19 to more increased volatility in the VIX. And similarly leads on page 20 to the white line, which is the U.S. yield curve going down as people seek the U.S. bonds for safety. And you can see the Treasury yield on 21. The 10-year is below 3 again. Recall at the beginning of the year, we had people telling us it was going to go to 4. So hopefully our managers are managing it well, and I think they are. But it's hard to make any money in fixed income right about now. You can see on 22, the high yield market backed up a little bit in June. It's coming back a little bit in July, but we took the opportunity to again sell some more high yield bonds. The stock market on page 24, you can see IFA, the Russell, and emerging markets. Again, they don't look very expensive, but people are just nervous, so they're very volatile right about now. It's not a good time to be a long-term investor. I'll skip the PE ratios on 25. If you look on 26, the key to really look at, since this is the May numbers, if you look, run your finger up from the May bar to June, that's the volatility that went on in the last month of our fiscal year. It basically ended where it started, but it was very, very volatile, so we'd have to wait and see how our managers did dealing with the volatility. You could easily have lost a bunch of money during the month of June. And then July seemed to start off great and then fell apart again, so it's just a very dicey time in the markets. That said, if you go to page 28, we lost some money in May. I think we probably lost a little bit in June, but we'll see. But we're still around $8 billion, which, if you go to the next page, we started the year at about $6.4 billion on page 29. So to end up around 8 is pretty damn good, in my opinion. I think we'll probably end up a little short of $8 billion, but I couldn't put a pin in what the number really becomes. If you look on page 30, you can see the asset allocation. We're under-allocated fixed income. We're a little over-allocated some equities. The asset allocation is in flux because we're working on transition plans to move from the old asset allocation to the one that the board approved last meeting or the meeting before. That's going to take us some time. We'll be working with NEPC to figure out the rebalancing ranges, so hopefully we'll have some ideas for you in September. On page 31, I want to draw your attention. The second group of boxes at the bottom, it says cash. We have 4.7% of the fund in cash. That's a very defensive place to be. In June, we sold a little bit of equities as well as some bonds, so we're probably pushing 6%, which is about as high as I can stand it, to be honest. But it's very, very difficult to figure out where it goes, and since we're doing the transition to the new asset allocation, I'm really not in a rush to put it someplace that's not consistent with where we're going longer term. If you look on page 32, I draw your attention to the middle column. So for the fiscal year to date through May, we're up 24.5%. We'll probably give a little bit of that back in June, but we had a release out of the controller's office that said we'd be in excess of 20%. I think that's right for fire. Again, I can't tell you exactly what. We should have the numbers. We'll definitely have the numbers by September and probably before that. If you look at the 3-year number, 3.25%, that includes the downdraft of 08. So again, we made back 08 and then some. So we feel good about that. If you look on 33, you can see, again, in May, the markets were down. U.S. markets were down 1%. International markets were down 2 to 3%. Made a little money in fixed income. A glimpse into June, which we don't have, but you can see the markets. Again, the top block, it shows we're down maybe 1.5 to 2% in the U.S., 1 to 1.5 internationally, and even down a little bit in fixed income. So again, we came into May sort of 8-ish. I bet you we come out 7.8 or something like that. But we'll see. Again, the final numbers, this isn't that bad, but again, we've got managers out there. If this is what the market did, you really could have gotten whipsawed if you got it wrong. So I'm not going to predict how we did or didn't do. The rest of the presentation is really the monthly results. I don't think we really have any comments overall on the monthly results of each manager. They're all sort of doing what we thought they would do. And again, the acid test is going to be how they really do in June. So more to come on that. One last thing before we get off to the results is if you go in the big book to page 57, as you know, we have this Tux report, which compares us to the other large public pension funds. Fire's case is public pension funds greater than $1 billion. And if you look at where we rank, 1 quarter, 2 quarters, 3 quarters for the year, you see we're almost at the top decile. So we're in the 13th percentile in the first quarter, 13 for 2 quarters, 18 for 3 quarters, and for a year, which is not a fiscal year, it's a 12-month ending March 31, we're in the 13th percentile. So we're halfway through the top quartile. We should feel very good about that. Hopefully we'll stay there throughout the end of the fiscal year. And that concludes our remarks on how we did in May, unless anyone has any questions on May performance. Good? Perfect. Come back to you with the full results next time we get together. Keep your fingers crossed. That's what we do in managing money. That ends that part of the program. I think it goes over to you now.
It does. Ask the board to turn to page 54 in the book. And what we have before you is a resolution where we're requesting the board to give the Comptroller's Office permission to build out what we're calling a real-time portfolio initiative. Step back for a second. I want to thank the board for their support. I know we've worked very closely with Controller Lou in promoting what's really in many cases been historic disclosure and transparency initiatives. This resolution before you today continues that, and the goal of the real-time portfolio would be to allow people to go on the web and get information on the portfolio on a daily basis. So you have the resolution before you. If you have any questions, I'd be glad to answer those questions.
Second to speak on the resolution. I'm here for Commissioner Frankel, who wanted to be here today but wasn't able to, and asking to apologize. We don't have any issues with the resolved clause, the idea of putting the real-time information on the website, but we do have some concerns about the whereas clauses. Specifically, there are 5 whereas clauses in the Comptroller's resolution, many of which don't have any relation to the action that the resolution is asking the board to take. In particular, the second whereas clause talks about a backlash against public employees and their hard-earned pensions. Whether or not one agrees with that statement, our office is concerned that statements like this about concerns about pensions or about actions that the Comptroller's Office have taken are really not appropriate for a resolution like this. What we did was put together a resolution taking out the whereas clauses and just putting one whereas clause which states the board is committed to transparency in our operations, therefore be it resolved. And we think that's a more appropriate way to deal with this sort of issue. So I'm going to pass that around for the board's consideration.
Mr. Carter, I think that we disagree with the remarks of the Finance Commission's representative. We do believe that the whereas have a relationship to the actions the board is taking in terms of promoting initiatives like putting the board investment results online, the cameras, the FAQs, and moreover, as far as the second resolve whereas goes, I think it's clear that that's the reality. And we stand by this and we believe that the board, in adopting this resolution as presented by the Controller's Office, is acting completely within their obligations. And we're going to invite a motion to remove the resolution as presented by the Controller's Office.
I agree with the whereas. I think they support the resolution. Explain it and support it. I make a motion to leave the resolution as it is, including the whereas.
We'll just hold for a second. Okay.
Can't hear you.
It was a little hard to hear you. Would you just repeat what you said, John?
My feeling, I like the whereas, is I think they support and explain the resolution, and I would like to keep them. So I'm making a motion to adopt the resolution as it is, including the whereas.
We'll second that.
And
Can we do a roll call vote on this, please?
Oh, we'll just hold on a second, okay? Okay, so there was a motion and there was a second, if I recall. And there was a request by Carolyn that we have a roll call vote. Okay?
So roll call of trustees on the motion. Mr. Dunn, just put on the table. Ms. Ranjina Goswami.
No.
Mr. Larry Strauss.
4.
Ms. Caroline Wolper.
No.
Mr. Steve Cassidy.
Yes.
Mr. James Levin.
Yes.
Mr. Robert Straub.
Yes.
Mr. John Kelly.
Yes.
Mr. James McGowan.
Yes.
Mr. John Dunn.
Yes.
Mr. James Lamonda.
Yes.
Mr. Sean O'Connor.
Yes.
Commissioner White.
No?
We have 15 votes for the motion and 9 votes against the motion, so motion carries.
That concludes our agenda for the public session.
Okay, so that's the agenda for the public session. That means that the electronic devices must be turned off at this point.